Okay, I see Lekalakala can hear me, and I don't know who else can hear me. And Mabela can hear me, Musima. So as long as 2 students can hear me, then it means our arrangements is fine. The problem cannot be from our side, it can be from their side. Now, the next issue is to allow us to admit students or to see them as they raise hands.
Yes, I get he's there to.
Okay, maybe Salome, what we need to do is let's start with the class. We will go slowly, and you will be dealing with allowing us to be administrators.
Because enough already. Just put in, yes.
Okay. I think, Sharma, come check me in 30 minutes whether they've allowed us to be administrators. But for now we can excuse you. Say it at around 9:30. Okay.
Yes.
Can I start with the class in the meantime? Coming.
but like you say, yes, and yes. Yeah, no, he will. He will. Okay, thanks, Ogilvy. Thanks. Bye.
Where?
Mr. Salome.
Next to I am.
Where?
Next to I am.
I can't see I am.
There.
Yeah.
There's a video thing.
I can't see.
There.
Oh my God.
What?
Hello, people pray. Hello. So Salome,
Hi, Mr. Tadi.
can I start with the class whilst we are getting?
Yes.
Okay. If good morning, dear students, and good morning, everyone. If you don't hear me or if you have challenges, please write a message on the chat group to explain what the challenge is. We will try by all means to assist. What we want to do is to welcome you to the ABK module, and I'm PMK Tladi. I'll be taking you through the module. What is important is for both myself and you to take each other by the hand so that at the end of the exercise, we all understand what bookkeeping is all about. Let me just go into the text and hope that we will be in a position to chat through the way. Dear students, I want to assure you that bookkeeping is one of the easiest modules at the law school. It only requires of you to understand how things are being done. It's as easy as ABC. The only thing, and I'm appealing to each of you, let us take away the mindset that bookkeeping is difficult, because bookkeeping is as easy as you follow the principles. I'm going to make it a point that I explain the principles, and my approach to the lesson is I am explaining to people who don't have a background altogether. So because you don't have a background, our explanation is cut to the bare entry level. But at the end, you will realize that with the entry level, you can chat your way around bookkeeping. Year in and year out, the first challenge we have is the mindset. And this mindset is brought about by previous students. Unfortunately, the impression they create is because they came in the same state as you are, they were taught by us, they could understand, but you cannot understand because only they can understand, which is an incorrect approach to bookkeeping. Now, I want you to say, if they could understand it, you will also understand it. As much as they were taught by us at the same level as you are today, you will be in their level after a week. And that is the attitude which we have. The students, I'm sure if you were to get into a mathematics class and you are given the sign 3 plus 5, you will easily go to 8 because you understand the rules of mathematics. You will not need a calculator or stones to try and check what is 3 plus 8. Now, we are going to put you in a position where you will know without going into the study guide that 3 plus 5 is 8. All we want you to do is extend your hand. Let me hold you with your hand and take you through the text. Year in and year out, I explain to students that the challenge we first have is trying to convince students that bookkeeping is easy. And I am saying to you now, I am going to make bookkeeping very easy. I have more than 15 years teaching this module, so I know how to approach it so that every one of us must find it acceptable, easy, and interesting. It is actually a very interesting module. As soon as you understand the principles, then you will realize how easy and interesting the module is. Now, as I say, once you have a challenge, please raise your hand so that we must be in a position to attend to your challenge. Dear students, let us go into the text. I normally say to students, it is not necessary for you to open the study guide because I make that study guide easy. Come with me through the guide, you will realize what I mean. Firstly, let us deal with a few concepts. The first concept which I want us to deal with is what we call accounting. The students, accounting is not as complicated as it sounds. It is an easy English expression or English word, which means explaining or explanation. Therefore, when we account, we are actually explaining. So throughout the module, we will be explaining. Let us not lose sight of the fact that the gist, the crux of the module is to explain, explanation. The second concept which goes with accounting is bookkeeping. The students, bookkeeping is also not as difficult as it is imposed or as it appears. Bookkeeping means keeping the records or preserving the records. Therefore, throughout the module, we are going to do with preserving the records in a way that is understandable, because we are explaining Therefore, let us see the module as a way of explaining the records which we have preserved. For instance, if you, in your practice tomorrow, you go out and you buy a table, you are not going to take a photo of the table to prove that you have bought a table. Instead, you are going to have a receipt. A receipt is evidence that somebody received money in exchange of the item he gave you, which in this case is a table. Then when you come to your office, what do you do with that receipt? Remember, dear students, when you come to your office, you've got two items. One is the receipt, the other one is the table. Now you take the table into an office and you use it, but you take the receipt, and our focus is going to be on the receipt. You take the receipt, you preserve it. Physically, it means you take that receipt and you put it inside a file. But in practice, before you put the receipt, the physical receipt in a file, you must record that receipt. So when you buy an item from a store and you get a receipt, the store is recording that transaction because they take their item out and receive your money, and therefore they record the fact that they received your money. The same applies when we get to our office. We must record the fact that we have acquired a table. But in acquiring a table, we must now record that transaction in our books of accounting. Remember accounting, our books of explanation, and then we take the physical receipt and then we put it away and we file it. And that is the crux of bookkeeping. Now, throughout our text, we will be dealing with how do I record this transaction. A transaction occurs in your books, a transaction occurs in your office. How do you record it before you put the physical receipt away? Therefore, throughout our text, dear students, let us understand that we are going to record transactions in a way that is understandable or explainable. I'm using that English word, aware that the proper word is explicable, but I want to be so easy and say we are recording transactions in a way that it is understandable. Meaning, when I come and I want to join your office and I want to join your business or your practice, I must be in a position to say, what do you have in your practice? And without physically going to count your chairs and tables, you can just give me a book where you recorded all the transactions. And if you have recorded them correctly, I must be in a position to understand your recordings, because your recordings will be explainable. Take this example, which I will illustrate on the board. If I say 5, oops, it doesn't look like the board. You can see it on the board. Okay. Let's leave the board for a moment. If I say 5 plus 2 equals to 7, I am sure in the mind of each of you, you have an instance where you wrote the figure 5, you wrote the cross, meaning the plus, you wrote the figure 2, you wrote 2 lines, and you wrote 7. The 2 lines is the equal sign. Therefore, when I come to your practice and I see you have recorded 7 tables, without you explaining that you've got 7 tables, I must be in a position to detect that from your book. Because you have recorded your books in a way that is explainable. You must record it in a way that it is easy to understand. Therefore, dear students, when you go through the whole process, they would say accounting is a systematic and logical process whereby a business reports to itself. By reporting, it means it is recording its transactions. Now, we have another concept here, which is called a business. Now, what is a business? We may have all forms of explanations of what is a business. I'm simplifying it. A business is a place where we are going to make a profit. Therefore, I'm now putting the puzzles together. We are going to record transactions in a way that it is explainable for us to see whether we are making a profit. We are going to record the transactions, bookkeeping, in a way that it is understandable, accounting, in order to see whether we are making a profit in our business. Now, as we record, it must be in a way that even somebody from outside looking at our books must be in a position to say, yes, this person is making a profit, or no, this person is making a loss. And that must be a way, or that must be detectable from recording our transactions. Now, when we deal with the business, we must be in a position to differentiate between a business and the individual himself. A business is defined even in our books as a place where we are going to be trading for a profit. But now we must understand this, that there is a difference between me as a business person and me as the owner of that business or as an individual. Now, there are going to be 2 separate entities which we must not lose sight of. Here am I've just graduated from the School for Legal Practice. I've passed my board exam and my period has run for the articles. Now I want to be a business person because I want to be a legal practitioner. an attorney in the old vocabulary or the old language. The moment, dear students, I start to take money and I buy a computer, for instance, the computer is bought for the business. But of interest is, it is me who bought that computer. Therefore, it introduces us to this concept. Without me as an individual buying furniture for the business, this business will never stop, will never start, because it is a separate entity from me as an individual. Therefore, what do? Myself as an individual, I must take my money and take that money and put it into the business in order for the business to start. And therefore, if you look at that concept, it means the business owes me money which I put into the business for the business to start. Let's run it afresh. Let's run it again. I'm an individual. I've got 50,000 rand in my back pocket. I want to start a business. Dear students, if I buy a laptop, or if I buy a table, or if I buy any kind of furniture, that furniture belongs to the business, which is a separate entity, not me as an individual. Therefore, if you look at it, it means the owner is taking his personal money, deposits that money into a different undertaking called a business in order for this business to function. Now, that said, we must now identify this concept and say the money which the owner invests in the business in order to start the business is called capital or capital. Now, what is capital? It's the money which the owner borrows the business for the business to start its operations. All businesses starts with a capital, which is that initial cash injection which the owner puts inside the business, which then says the business owes me the money which I borrowed it in order for the business to start. I think once we grab this first concept, the rest of the concepts are going to be hanging on the understanding of capital. Now, dear students, once I, as an individual, deposits the money into the business, that transaction has to be recorded, and it has to be recorded in a way that it is explained, and the explanation must be understandable. Therefore, when you come and join me in my business and you see the 50,000, you must not think the 50,000 is the profit I am making. You must also not think the 50,000 is the money which I am paying for my car or for rent. You must be in a position to identify that this is the money which the owner deposited into the business for the business to start. And that you can only do if you understand how I have recorded this transaction. And on the other hand, I must record this transaction correctly so that this person who is joining me must know what that money is all about. The students, I see there are two students, I think Augustine and Titelo are not having sound on their gadgets. Let's try and guide them. If you go on the gadget you are using, there will be something like a mic. Just unmute that mic, the sound will come through. I hope all other students who have logged in can hear me. Let me see, let me just test whether people can hear me. Are there people who are having problems with sound, or am I audible? Please respond on the chat group as
You are audible.
I'm audible.
I can hear you, sir.
Okay. Then Titelo and Augustine, please attend to your challenge, because many or all other students can hear me, and hopefully they can also understand. Please attend to that. Thank you, dear students. I can see I am audible. Let us proceed with the lesson. Now, when you do your preparations, there will be a statement in your study guide which says, when a business starts, it owns nothing, which is true. It only starts to have something once the owner starts depositing money into its books in order for the business to start running. Now, when we deal with bookkeeping, we must know that the initial funds which the owner injects into the profit-making mechanism called business is called capital. I'm recapping. Now I'm talking to bookkeeping and accounting students. I'm saying this module is about recording bookkeeping, all the transaction in a way that is understandable accounting for the undertaking which is going to make a profit business, which started its operation from money it received from the owner capital. Let's take this simple example. I am a student at the law school, and I want to start my own business, and I realize most students in this class are smoking. I go to the local shop, I buy a packet of cigarette, 20 in that box. I buy that for 20 rand, and I come to the school and I start selling my cigarettes one by one, what we call loose cigarettes. Dear students, I'm sure each of you is now thinking, yes, that is a business. But the money I take, the first 20 rand I take in order to buy that cigarette, I am not buying the cigarette for my own consumption. That separates the purpose, buying it for consumption or buying it for sale. Now, I'm buying it in order to sell, therefore I am starting a business. That 20 rand which I put into the business to start, it's called capital. If I don't buy the cigarette from my pocket as an individual, that business of selling cigarettes will never get off the ground. Now here am I bought 20 cigarettes for 20 rand, and then I start selling each cigarette for 50 cents. I can hear all of you saying, but that business is not going to work because I am selling the cigarettes at 50 cents. It means when the 20 cigarettes are all sold, I will be sitting with 10 rand in my pocket, and I used 20 rand in order to buy the packet. Therefore, the sales do not make business sense. Therefore, I'm not going to make a profit. Somebody sitting there saying, yeah, if I were you, I will sell it for 1 rand. Let's look at it. If you sell it for 1 rand, then it means after selling your 20 cigarettes, you will be sitting with 20 rand. What are you going to do with this 20 rand? You're going to buy another box. Are you making a profit? Remember, you said you are a business. Are you making a profit? The answer is obviously no. But at least you are not making a loss as compared to the time when you were selling it for 50 cents. But what happens? Every time I sell a cigarette out and I receive money in my business, I must record the fact that a cigarette was given out. I must also record the fact that I received the money. Think of this, dear students. With this cigarette example, how much would you sell your cigarette for? Somebody is saying 2 rand, somebody is saying 1 rand 50, somebody is saying 2 rand, 3 rand, all those. It is because we are making a business which must make a profit. But for us to see whether this business is making a profit, we must be in a position to record all the transactions which occur in this business. I will now indicate to you that if you are going to sell your cigarettes at 1 rand per cigarette, you are actually operating at a loss. The loss is not as much as you would experience if you were selling 1 cigarette for 50 cents. But it is at a loss in the sense that all the transactions which happen in your business, when they are recorded, you will realize that you are operating at a loss. For instance, you're going to need time to go and buy the cigarettes. That is transport. Therefore, the transport expense must be built into your price for selling one cigarette. If you are using a taxi and you pay 10 rand per trip, then it means the packet is 20 rand, but you've got an additional 10 rand which you must add onto your price. Will you now sell your cigarette at 15 rand? If you sell it at 15 rand, then you are still on a level, you are still on par, because remember, the 20 rand will go towards buying another packet, the 10 rand will go towards the transport. Therefore, you are still not making a profit. Somebody else would say, yeah, and I would be having a match or a cigarette lighter in order to enhance my services. That is also an expense which needs to be built into the price of selling that cigarette. The students, I'm not in any way political, but let me explain this. This packet of cigarette you will buy in town, it's much cheaper than the packet of cigarette you will buy in your rural area, because your rural shopkeeper adds transport into acquiring the stock he is selling. That is why you will find in town there will be cheaper and sales, because the cost of acquisition is less than the cost of acquisition in rural areas. Let's go back to accounting. Now, here we are, dear students, we are saying each transaction must be recorded. Now, sitting here, we have learned a few concepts already in bookkeeping, and I hope we are together up to this point. Dear students, please, if you are lost, send a message there, type a message there, so that I must not lose grip of your hand. I assume so far so good, because I am taking this lesson slowly. My slow pace is to enable all of us to be on board. At the end, it is you who will understand, and please don't sit back with a question. Whenever there is a question, shoot and ask. Now, I want you see what, when we talk the cigarette business, it is easy to check whether you are making a profit or not. But think of the example they give in your guide. By the way, when that guide was written, I made some form of comments for the authors, so I know this guide off my head. I know it. I can actually recite it. This must now give you confidence to say you are being taught by the author of the guide. Now, let us look at the instance where you are selling coffee. You identify an instance where you want to sell coffee and bread at the school. Now, in that way, what you then do is you must first identify what do you need and what are you going to sell. For instance, if you buy your cutlery, those are going to be used. They are not going to be sold. But if you buy bread and cheese and jam and peanut butter and sugar and milk, if you like, those are your consumables. Those are the things you are going to sell. At the beginning, when we start recording, we will record that you bought 5 tables. You buy the 5 tables, each table is 200 Rand. To us, it shows like you spent 1,000 Rand. Remember, you spent 1,000 Rand from the capital, the money which the owner has borrowed their business or has invested in the business in order for the business to start. Now, this 1,000 Rand, when we are going to be determining our profit, we should not consider it because this is not what we are selling. We should consider how many breads did we buy, how many cheese did we buy, how much sugar did we consume, all the consumables, the cost of acquiring and the cost of sale will tell us whether we are making profit or not. Let me come closer. You are selling bread, butter, cheese, and sugar at the school. You buy your bread for 300 Rand. I mean, for 20 Rand. Dear students, excuse me for a second. I need to take notes here. Hello? Are we in one class still? You buy bread, 5 loaves at 20 Rand, and it is now 100 Rand. You buy sachets or this packet of butter, you buy 50 of them at 1 Rand, at 2 Rand each. You spend another 100 Rand. You buy sugar, you buy 100 sachets at 3 Rand each, and then you spend 300 Rand. You buy coffee, sachets still, 100 of them at 3 Rand, you spend 300 Rand. So all in all, you have spent 800 Rand. By recording that the bread has cost me this much, and the bread has cost me 20 Rand, and I have 5 loaves. The butter has cost me 50 Rand, and I have 20 of them. the sugar has cost me 100 rand, 3 rand, and I have all those, because they have been recorded, then it means, what have we done? We have kept the books. Now you start selling. You sell each sandwich with bread and coffee. You sell it for 5 rand. On the first day, you have 5 sales at 5 rand, and then you've made 25 rand. On the second day, you sell 10 at 5 rand, you made 50 rand. On the third day, 3 at 5 rand, you made 15 rand. 6 at 5 rand on Thursday, you made 30 rand. On Friday, you sell 10 again at 5 rand and you make 50 rand. Now, my quick addition says to me, in that 1 week, you have sold 170 rand. Now, dear students, if you look at what I have done, every time when I sell, I would receive money and record it, and I will give you the bread. Now, I'm sitting here with my notes where I spent 800 rand and I received 170 rand in my business. Once I say in my business, then the question kicks in. Am I making profit? If I was to ask you now, please answer that question on the chat group. Am I making a profit? Maybe you should. Looking at my business, I bought bread, butter, sugar, coffee. What I bought has cost me 800. What I sold, I have received 170 rand. Am I making profit? Everything has been recorded, meaning I have kept the books. Please answer me. Can you detect, can you tell whether I'm making a profit or not? Come, students, am I making a profit? I mean, that's your personal observation of my business. Nyalunga says, no, you are not. Is there, and Mapela says, no. Oh, it looks like everybody says, no, I'm not making a profit. So Fabela also says, no. Now let me come closer to their answers. Or perhaps to the silence of many of you. The silence is probably, we cannot make sense of whether you're making a profit or not. It's not possible for us because we don't know how many bread is left. We don't know how many sachets of sugar are left. We don't know much. Although you have recorded the transaction, we cannot understand your business to the extent of determining whether I'm making profit or not. Therefore, it says to us, whenever we record, we must record in a way that it will expose at the right time whether we're making profit or not. Then bookkeeping says, because in this example, we don't know how many bread is still left. We don't know how many sugars of sachets you still have. Although you have recorded, we cannot tell what is your stock. I'm sure, dear students, you have seen it. There will be a sign in one of the shop where it says, shop closed due to stock taking. They are taking stock in order to check how much of the stock are they still having for them to sell, and how much have they sold, and whether they're making a profit or not. Now, it says to us, with our tea and bread business as it stands, we will not be in a position to tell whether we are making a profit or not. Here we go. On Wednesday, I go and I buy 3 more bread. How do I record that? Because here I've recorded 100 rand, which I bought. If I write there 60 rand and I write bread, although I have recorded the transaction, it still does not expose whether we are making a profit or not. Therefore, bookkeeping said we need to divide, or we need to distinguish these transactions. We must be in a position to record the transactions in a way that it is easily understandable just by mere looking at the record. Then bookkeeping came with a design. The design is in the form of a capital letter T. I wonder whether it is visible there. Now, in the capital letter T, bookkeeping came with a concept and said, when you look on the left-hand side of the T, isn't a capital letter T, it's a line on top divided by a line going down. On the left-hand side, we will record transactions, and we will also record transactions on the right-hand side of the T account. Now, when I'm standing here and my arms are stretched like this, I've got the left-hand side and I've got the right-hand side of the T account. And bookkeeping then said, we are not going to talk about the left-hand side of the T account or the right-hand side of the T account. Bookkeeping said, whenever an entry is going to be entered on the left-hand side, that left-hand side is called the debit side. So in our T account, all entries which are on the left-hand side, we will say debit. and all entries which are on the right-hand side, we will call them credit. Let's run it again. If I say to you, open a T account, you will write the capital letter T. And I say, in this T account, we are going to record bread. Then we will call this T account the bread T account. Kakao, I see it is blurry. I will get my IT guy to work on the problem. I think it is. I'll work on my IT guy to work on the problem. But let us say let me call somebody. Ma, repeat. I've switched off one light. Let me switch one more. Shall I get something? We must switch off, we must close off that light. So I've closed with that thing there. There's a bot. Just. Will it work?
I think so.
We need to put that chair close by. Let's see. The problem is that light.
Can you use this?
Yeah. see. Now, let's see. Oh, which light is now? I think it's the light which is reflecting is that one. It reflects more on this.
Oh. So remove this.
No, just put that thing there.
Could you send to my
Okay, let's get another one. Let's see if the place I want them to be dark. Let's see. Let's put it like this. Which one is that one? Close that one off. Yeah, it appears fine. What does it mean? We must relocate to the boardroom. Let's relocate to the boardroom and switch off the lights.
Okay.
Which are separate. Yeah. Or to the room where we will not need lights.
Not working, no?
Huh? All right, let us go on with the lesson. They will bring the board. And dear students, thank you for your indulgence. Refibe. Now, we have now learned that you will put an account which is T in format, and get me the notes from the class. And that T says to you, on the left-hand side, it's your debit. On the right-hand side is your credit. Therefore, when we make any entry, for instance, we will then say, let us call this T account and name it the bread T account. Open that, there must be enough light. Now, I would then say to you, this T account, which we call bread, debit it by debiting a T account, which we call bread. Let's see. Tumelo, all we need to do is to check whether, or close this. And then open that door. When I say to you, debit the bread account or the bread T account, it means make your entry into the other one. The account which needs, or which we called the bread account. Will it not make sense for me to work from outside? Dumelo, bring that thing here. I'll teach from outside. Just put the board here and against the wall. No, just close it from inside. Get me a pen. The bread is here. This is so visible, but the thing is a bit down. Get me the chair. This is visible, but you're not gonna see the background. Yes, ma'am.
How do we connect the second laptop when that camera is at the laptop?
Okay,
We do that.
yeah. But can we do it from here? Like I'll do the theory and then the practical stuff like the camera. Just give me the notes. As long as like I create a stage where the blackboard, the whiteboard can be visible, just give me the notes. Dear students, we are dealing with the logistics of the blackboard, but for now we can continue with the theory. The illustration will come at a later stage. Now we are saying here is a T account which we call the bread account. And I say to you, debit bread with 5 loaves. What it actually means is not just that one, this one. What it actually means is go to an account called bread and make an entry on the left-hand side of that account. Now, it does not matter, dear students, what kind of account you are dealing with. Of importance is for us to know that the left-hand entry of the capital T account is called the debit, whereas the right-hand side of the T account is called credit. Now, I am sure in our everyday experiences, you have heard people say, debit this, credit this. If they say to you, debit cash, it means open a T account, capital T account, go and call that T account cash and make an entry on the left-hand side of that T account. Now, whether you are at our level or at the level of doctorate, we must know that the left-hand entry, it's called debit. The right-hand entry, it's called credit. So we have now learned further the concepts debit and credit. It is one of the outcomes which we must achieve in this class. In order for us to assess whether the business, remember the business is where we are going to make a profit. To assess whether the business is profitable, we must record all transactions in a way that it is understandable, because in recording the transactions, we are keeping the books in a way that is understandable. We are accounting. And in accounting, whenever we start the business, we need to inject the first cash, and by injecting the first cash into the business, that cash injection is called capital. Let's recap now. As we sell bread and butter, we are going to open accounts in the form of a T, and each T, we will give it a name. The name being what that T is going to record. For instance, in our previous example, it means we will be having a T account where we are recording bread, a T account where we are recording coffee, sugar, peanut butter, all the commodities which we are selling will be recorded in a T-like structure. And as we record them, at some stage we will record on the left, at some stage we will record on the right. Now, our lesson, dear students, is for us to know when are we going to record on the left, when are we going to record on the right, and why. Remember, once we say why, we are answering the question understandable. So each transaction, whether we enter it on the left or on the right, we must have a reason why are we entering it on the left or on the right. And when we enter it on the left or on the right, bookkeeping says, no, we must not call that the left and the right. We must call the left the debit side, and we must call the right the credit side. Then bookkeeping went further, and it says, we cannot keep on saying this is a T structure. That T structure is called ledger. L-E-D-G-E-R. Let me talk to students in this class. Open a bread ledger account. What does that mean? It simply means draw the capital T and name it bread. That capital T structure is called ledger. Bread is the name of that ledger because bread is an account. Account is what we are going to explain the movement of bread. Movement meaning whether we acquire or whether we sell. The whole concept is now taking shape. I know when we started, we had issues of what are we going to understand about a credit or a debit? It's simple. A debit means enter an entry on the left-hand side of the ledger account. Here we go, dear students. Now we're getting to the practicals. I buy 5 loaves of bread. What does that mean? It means my business has acquired bread. And the bread, the acquisition of the bread is a transaction in my business. And because it's a transaction in my business, it must be recorded in a way that it is understandable. How do I record it? I go to my books, write capital letter T, meaning I am opening a ledger account. That capital T, I give it a name and I call bread. Could we imagine the confusion which will be there if I was going to record bread in an account which I call chairs? Then it means whatever I have recorded is not going to be understandable because I have not acquired chairs. I have instead acquired bread. Therefore, the transaction, because it involves bread, it has to be recorded in the bread ledger account. The bread T account, or a T account called bread. How do I record that? That is something which we must learn in a minute. Then I invite you to take this equation down. Equation means something which talks about equality. It says in bookkeeping, and this is what bookkeeping tells us. Like mathematics tells us 3 plus 5 equals to 8. Bookkeeping tells us assets equals to owner's equity plus liabilities. Let me repeat that equation. Assets equals to owner's equity, the equity of the owner plus the liabilities. Let's go back to what we have learned. That when I start my business and I give my business money, that money is called capital. And capital equals to what I own in the business. Therefore, my owner's equity is my capital. Assets equals to capital plus liabilities. But we don't say capital, we say owner's equity. All assets, that is my laptop, my table, my chairs, my computer, my motor vehicles, their value as recorded must be equals to the value of my owner's equities plus liabilities. We are going to play around now with that equation. It therefore says, because there is an equal sign between, on the one hand, assets, and on the other hand, owner's equity plus liabilities, we are going to have this distinction. I have a T account where I am going to record all my assets. And if I acquire an asset, please understand me now. It is becoming more interesting. If I acquire an asset, I will open a ledger account, a T account, for that particular asset which I am acquiring. Give that T account the name of the asset I am acquiring, and then because I am acquiring, then I will debit that kind of an asset. It simply means when you acquire an asset, when you receive an asset in your books, you open the type of asset which you are acquiring, and then you debit that particular asset. Let's be practical. Here am I in my shop. I want to buy a chair. Now I must start analyzing. What is a chair? A chair is an asset. When I come with this asset in my business, what am I going to do? I will open a T account, call that T account chair, and then I will debit that chair ledger account. Let's take it further. I have 5 candidates in my office which I want to employ, and I realize I am going to need 5 more chairs. Then I go to the store. For argument's sake, dear students, let's call this store Jessica. Then I go to Jessica's store and I acquire 5 chairs. When I come to my office, I go to an account, T account, where chairs are being recorded, and because a chair is an asset, then I will debit the chairs account. After a year, 2 of my candidates have now qualified in the board exam and they want to open their own offices. Let's focus on my business. I decide I want to give them the 2 chairs as they leave my office. Losing the 2 chairs, it's a transaction which I must record. Remember, as we stand, my office shows that I've got 5 chairs. But when these 2 guys leave, I will be left with 3 chairs. Go to my account called chairs. Remember when I acquired, I debited 5 chairs. Now I am giving away 2 chairs. If I was to debit, then it would mean I am acquiring 2 more chairs. Am I really acquiring? No, I am actually losing 2 chairs. Therefore, instead of debiting my account called chairs, what will I do? I will now credit. What is my lesson here? My lesson is when you acquire an asset, you debit that kind of an asset. When you lose an asset, you credit that kind of an asset. When your assets increase, they increase on the debit side. Remember, the debit side is the left-hand side. And when your assets decrease in number, they decrease on the credit side. Therefore, I will say to you as an exercise, you can do it at the leisure of your room there. You go to Jessica's store, you buy 5 tables, record that transaction. What must go into your mind is, what have I done? I have bought 5 tables. You are analyzing the transaction because you want to record it in a way that it is going to be understandable. Now that I've acquired 5 tables, what do I do in my books? Go to a ledger account or a T account called table. When the T account called table is in front of you, then your next step is this increasing or decreasing? Oh, I am acquiring. It means my assets are increasing. Therefore, I must debit. Here am I donating a computer In my office, as we speak, we've got about 30 computers. No, there are actually 36. And in the 36, 5 are not being used. If you come now and you want to join my office, I will give you a book where I have recorded computers. And you will realize, oh, this practice has got 36 computers. But last week, Friday, we decided we want to identify 5 rural preschools. And then each preschool, we are going to give them 2 computers. What does that mean? It means you will see 36 computers debited. When you come, you will also see 10 computers credited. Why do we credit 10 computers? Because those are the computers which we gave away to the rural preschools. When you now check, how many computers are we having? We are having 36 which was acquired, less 10 which was given away. Therefore, in bookkeeping, in accounting language, we had debited 36 computers because we acquired them, and we credited 10 computers because we gave them away. When we give away an asset, the asset gets credited. When you acquire an asset, the asset gets debited. Debit, entry on the left, credit, entry on the right. It's as easy as I said. Dear students, if you don't understand what I'm explaining, please put on a chart there. Raise your hand. I'm sure if you raise your hand somewhere, I'll be in a position to see that somebody's hand is up, and I will allow you to ask your question. I take it so far, this is easy. But now going back to our equation, we said assets equals to owner's equities plus liabilities. Now, if you have that equation, assets will be on your left as we speak, equals to owner's equity and liabilities are on the right-hand side of the equal sign. Dear students, if we are dealing with a transaction which involves a liability, our liabilities increase on the credit side and they decrease on the debit side. It means we are talking a structure like this. The assets increase on the debit side. Once you cross over the equal sign, you get liabilities. Liabilities increase on the credit side. The same token, assets decrease, they reduce on the credit side, that is the right-hand side. When you cross the equal sign, you find liabilities. When you debit a liability, you reduce it. Let's take this example. Lekalakala has got a shop where she sells office equipment. Amongst the office equipment she is selling chairs. Let's go back to chairs. Let's restrict it to chairs. It's easier. Now, I go to Lekalakala and I say to her, Mahlako, please, I want a chair, but I don't have money. And Lekalakala says, okay, take this chair, but you owe me. It means in my books, when I come home to the office, although I have acquired a chair, I have also created a liability in the sense that Lekalakala is now somebody I owe. What do? I must record the fact that I owe Lekalakala as a business. But now, let's analyze it. How do I record this liability called Lekalakala? I open a T account. Dear students, all the transactions are going to be recorded in a T structure, which we call a ledger account. Now here am I open a T account, call it Lekalakala. But what is Lekalakala to me? Is it an asset? No. This time I'm not recording the chair I've received from Lekalakala. This time I am recording the liability I've created because I have created a debt I owe Lekalakala. And somebody who the business owes is a liability to the business. Now, here am I now. I've got a T structure. I've got Lekalakala on top because now my focus is on Lekalakala. What is Lekalakala to me? Is he an asset? No, he's not an asset. Instead, he is a liability. Now that I have identified the type of account I am dealing with, remember, account means explanation. Now that I know what must I explain, I must explain the liability called Lekalakala. What is my explanation? My silence is to allow you to answer the question on your own. I will just confirm the obvious thing which you know already. Lekalakala is a liability to me. What happened to my liabilities? Did they increase or did they decrease? Did they increase or did they reduce? Obviously, my liabilities have increased because I have just acquired a new liability called Lekalakala. Now what do? Go to Lekalakala, credit Lekalakala. Why am I crediting lekalakala? Because lekalakala is a liabilities, and my liabilities increase on the credit side. If lekalakala was an asset, then I would go to this asset called lekalakala and increase it on the debit side. But no, lekalakala is not it's not an asset. It's a liability. Therefore, I must take the appropriate step, a step which will be understandable and recorded. What is that step? The step says a new liability has been acquired or has been created, meaning my liabilities have increased. Therefore, I must name that liability and increase my liabilities. By increasing my liabilities, it means I must credit that liability which I've created. Here we go. Lekalakala gave me a chair, and this chair is worth 1,000 rand. What do? Ledger account, name it lekalakala, credit side, credit 1,000 rand. That is clear. Come month end, I have now acquired or received some money, and I pay lekalakala. Remember, I owe lekalakala 1,000 rand. Dear students, let's not complicate it now with interest and all those. No, let's just deal with the liability as it stands. In my books, what is lekalakala is a liability. How much am I owing lekalakala? I owe lekalakala 1,000 rand. But now I've got 200 rand. I take the 200 rand and I pay lekalakala. Imina, you must know it. You must know it, obviously. And dear students, I'm just giving an example about Imina. Mzimba, just replace Imina with yourself and say, oh, this is what I will also do. Nyalunga, just say, this is what I will also do in my books, E2. Now, when I give you the 200 rand, in my books, am I still owing you 1,000 rand? No, I owe you 1,000 rand less the 200 rand which I have received. Abedi, I'll come to your question. I owe lekalakala the 1,000 which I have created less the 200 rand which I've now paid him. Now, what is the impact of that 200 rand on my liabilities? Dear students, remember this. If I take the 200 rand and credit lekalakala's account, it means what? I am increasing my liability. Is my liability increasing when I pay? No, it is reducing. Therefore, remember, if you credit a liability, the liability increases. What are we doing now? We are actually paying this liability, and when I pay, the liability must reduce. What must I do? I must take my 200 rand, go to lekalakala's account and debit lekalakala. What is the impact of debiting a liability? When you debit a liability, the liability reduces. Let me take the question by Abedi. The question says, when debiting or crediting an asset, do we record it by value or by name? If is by price or value, do we use the initial or, okay. When you record a transaction, you record the value which you are paying. Here am I'm buying a chair from Lekalakala. The price tag I am paying is 1,000 rand. What am I recording in my books? 1,000 rand. I'm not, even if I'm aware that this chair is worth 1,500, in my books, I acquired it for 1,000 rand. Therefore, my books must indicate that the value of the asset I've just acquired is 1,000 rand. It is not only the asset, but in all transactions, dear students. Whenever you are recording a transaction, record the transaction being the value of the transaction. I know previously I said I acquire 5 chairs and then I give away 2 chairs. In that way, I was merely trying to explain to you that the chairs are no longer 5 but 3. Let's do it practically so that Abedi must be with us. Abedi, here am I buying 5 chairs for 8,000 rand each. What do I do in my books? When I get to my books, I will sit and say, what have I done? I have acquired 5 chairs. What is a chair in my business? A chair is an asset. Therefore, when I acquire assets, what happens to my assets? My assets will increase. By how much did my assets acquire? My assets are increased by 1,000 times 5. I'm not going to record 5,000. I'm going to record 5,000s, 5 1,000s. Each chair is recorded as 1,000, 1,000, 1,000, 1,000. But I've acquired how many chairs? 5 chairs. So that tomorrow, when I give away 2 chairs, what am I going to do? Remember, when I acquired the 5 chairs, I debited the chairs account 5 times with 1,000. Now I am giving away 2 chairs. What am I going to do? What is a chair to be? A chair is an asset. When I give away the chair, what is happening to my chairs? They are reducing in number. Where do I reduce my chairs? Do I reduce an asset on the debit or on the credit side? Assets reduce on the credit side. Therefore, I will go and credit 1,000, credit 1,000. What is the impact of crediting those 1,000 twice? The impact is 2 of my chairs are now out of my books. I am now left with 3 chairs. Abedi, I thank you for the question. I hope you are now with us. You are clear. I want us to take more lessons. We all now see that if I acquire an asset, I must name that asset and debit it. If I give away the asset, I must go to that asset and credit it. But if it's a liability, if I increase or if I acquire my liabilities, I must create a T account, give it the name of that liability. Because it is increasing, then I credit it. The same applies with the liabilities. If I'm going to pay and reduce that liability, then the entry will not be on the credit, because if it goes to the credit, it means my liabilities are going to increase. Then what must I do if I want to reduce my liability? I must debit them. The same behavior is done with owner's equity. Dear students, I'm smiling now. Now that we have one example of owner's equity which we know. Remember, owner's equity is the equity which the owner, is the investment, is the injection which the owner started the business with. What did we call it? Capital. Boom, here we go. Capital of 50,000. Record it. It says to you, first know what is capital. Is it an asset? No. Is it a liability? No. What is it? It is an owner's equity, because that is the funds which the owner starts the business. Go open a T account. Are we going to call that T account owner's equity? No, it has got its special name. What is the special name? Capital. Let's call it capital. In my notes, dear students, I've got a T account and I've given it the name capital. Now I'm analyzing further. Remember, the more I analyze is the more I understand. And when I understand, it means I will be in a position to record the transaction properly or correctly. Here am I, value 50,000. What is this 50,000 to me? It's capital. What happened to my capital? Did it increase or decrease? Remember, the business started with a zero capital. It had nothing. Now I'm giving it 50,000. What is the value of my capital at the moment? It's 50,000 from zero. From 0 to 50, it means my capital has increased. It has gone up. Then I go to my T account, which I have in my notes. Where do we record capital if the capital goes up? Thank you. I know you have answered it. You all said we will record it on the credit side. You are correct. On the credit side. What do I now do? I go to the capital account, which I have created. Boom, there I go on the credit side and I record 50,000. What is the analysis of that transaction? The analysis of the transaction is the starting business, or the business started with an injection of 50,000 rand. So, like liabilities, your equities will increase on the credit side and decrease on the debit side. Now, and this is what all the previous students would say bookkeeping is a challenge or is difficult. The difficulty is failing to identify the type of account you are dealing with. Now, obviously, if I say to you, I buy a chair is an asset. You cannot have a chair as an equity. You cannot have a chair as a liability. A chair is an asset. Let us focus on recording that asset called chair. What happened to your chairs? They've increased. Where do assets increase? On the debit side. What do? T account, call it chair, debit. Simple as all that. Now, there is an animal, and I'm saying this despite being recorded, and I know there is an animal in Venda. I love the name. It's called a Nyamolemalema. Huh? Nyamolemalema. In my mother tongue, it's called Mankhagane. In English, it is called a bat, a B-A-T. A B-A-T is such it's such a confused animal. When you look at it, it is a mouse. When you come closer, it has got wings and it is flying. And biology classifies that flying animal as a mammal. It means it has got teeth, it feeds its children or its offspring through the teeth. Oh, what a confused animal. Why I mention a nyamolemalema is if when you acquire a chair, instead of debiting, you are going to credit it, then you are creating a nyamolemalema in our books. You are creating a confusion, a huge confusion in our books, and we should not do that. Nobody will ever understand that kind of a transaction. So remember, dear students, whenever we transact, we must transact and record in a way that is understandable. We must not create a nyamolemalema in our books. Here is this student called PMK. He acquires a car in his business. What is a car to him? It's an asset. What must he do? Open a T account called ledger. Call the T account, name it what? Motor vehicle, or name it what? Car. And what must he do with that car? He must debit that account. Now, if I come to your books, the first thing I realize is you have credited a car. Then I'm going to hold myself in astonishment like a nyamolemalema and say, what is this confusion? Why do you dispose a car which you don't have? So the bottom line is, if you record the transaction correctly, we will not have a confusion in our books. There is no account called asset, but asset is the holding name, and the types of accounts would be your motor vehicle, your table, your laptop, your computer, your chair. All those furniture are assets. So don't ever open an account and call it asset. You must just know that this is an account which is classified as an asset, but its name is table. Its name is bread. Dear students, don't even write asset bread or asset laptop. No, just open an account, call it laptop, and with that laptop, we all know that a laptop is an asset. Because you are acquiring an asset, debit yourself. I think we are making sufficient progress. I'm going to suggest that we take a 5-10 minutes break, and we will come back at, let's say, 11:30, so that we must all reflect on what we know by now. Do we need a break or should we go on? Let's be democratic. 5 of you who tell me first whether we must go on or we must break, we will do that. Are we breaking or are we proceeding? We've got 2 more lessons to learn and then we start playing. Sohabela needs a break. Musima needs a break. Oh, there we go. Let's have a 10 minutes break and 15 minutes break. We'll come back at 11:30. But before we take a break, like you have responded here on a break, are we in one class? Do you understand me so far? I must also apologize. We were trying to get the right spot for the notes, and there was just a lot of reflection, and we can do away with that part. Oh, thank you. Oh, I'm smiling. I'm smiling, Tsepo. I am smiling. My is not so far. We are not going to go any further. This is just what we are going to learn. So if you understand so far, it means you understand everything. Good, let us take a break. Let's come back at 11:30. Thank you, students.